What's going on, everybody? Good evening. My name is David Piatek, and I have
And I'm Lourdes
Lourdes
Fernando.
Fernando with me. We kind of messed that one up. Welcome, everyone, guys. Today, we have some exciting stuff. We're going to do a Q&A about using your VA home loan. So if you guys have any questions, please drop them in the chat. We're going to be here for about an hour. And then, we also have some good information to give you guys if you guys don't have questions. And some questions can lead us down a rabbit hole. So here at VA Housing Education, we educate the military community around using the VA home loan, how it works now or in the future, and how you can really leverage it to build wealth, because a lot of veterans do that. So I'll give you guys a quick background about myself. I've been in the lending business for about 18 years, currently serving in the Guard for the last 14 years. Love what I do. Anything with real estate. I love to give back to the veteran community, and that's why we created this. Lourdes, tell us a little bit about yourself.
Yeah, so my name is Lourdes Fernando, originally from California, now live and work in the Chicagoland area, and served 11 years in the Army National Guard and loved it. And this is a way that I can give back to the community, is just really educating and training veterans and service members on how to use their VA home loan.
Oh yeah, and right now a lot of people have questions because it's a little bit tricky, right? The market, all the things you hear on the news. So we'll be covering that as we go. So let's answer our first question: is that how do I find an attorney that can help me with the VA home loan assumption? I'm not working with an agent. That's a good question. So in a VA home loan assumption process, there's different ways to do this. Now, normally, depending on the state that you're in, you wouldn't be working with an attorney to do an assumption, because you are going to be working with the seller's servicer to help you with the assumption, right? Normally, you don't use a lender. You wouldn't use an attorney. You would actually use, again, the servicer's mortgage company in order for them to facilitate that transaction. Hopefully that helps with that. One of the good things with VA home loan assumptions, if you guys don't know about, and it's something I talk about frequently in my classes, is that VA loans, FHA loans, and USDA loans, all three of those loans are assumable, meaning that somebody can assume the original or the current balance and the original interest rate of a mortgage and pay the sellers the equity that they have. So I'll give you an example. Let's say you have a house that's for sale for 500,000. The mortgage balance is 450,000 and a 2.25% interest rate. You can get that 2.25% interest rate by assuming that mortgage, and you would give the sellers that $50,000 in equity in either cash, or you would borrow against like a 401k, TSP account, or if you have family that likes you, they'll give you that money, right? You can use that as gift funds. And something interesting as well with these assumptions is what I've seen is that you can actually borrow money to do a down payment on a VA assumption. It's actually on the VA assumption questionnaire that you fill out when you apply for these benefits. So it's an awesome way to be able to get those low interest rates and be able to preserve that. And VA assumptions are also a great way to, let's say, if your parents have a VA home loan, they're up there in age. It's also a good way from an estate planning purpose that you can actually assume their mortgage as an investment property, where in FHA and USDA loans, you must occupy that property as a primary residence. So we do have a whole video on that on the YouTube channel that you can check out, all around VA assumptions. Now, that is for realtors, the one that we did. But at the same time, all the information that's on there, you guys will be able to take a look at it. So let me find it, and then I'll drop it in the description on that. Lourdes, have you got experience working with these assumptions?
Yeah, a lot of inquiries on assumptions, specifically on some of the condos that I had. One of the biggest things is coming up with that. Not a lot of people do have the equity to cover that. And
Right.
that's just kind of, but if you do, I think I ran the numbers and it's saving over $250,000 of interest if you are able to do an assumption. So there's so many so many benefits and so many things that go with that. So there are some upside if you do have access to that cash, and getting locked in with these interest rates is going to save you so much money in the long run. The long run, and these payments are so much. Uh, the payments are a lot lower compared to your regular payments at the 7, almost 8% interest rate that we're seeing today.
Right. And that's the thing that people don't realize, or with those, is that on a $500,000 loan, a 2.25 interest rate, you're paying about 650-ish thousand in total payments versus today's rates at 7.5, where you're paying almost $1.4 million in money back. So it's a significant amount, right? It's almost $1 million in interest. But just remember, one of the things that people are on the fence right now. So I just kind of jump into some of the categories that we already have kind of like preset for ourselves. Is when you talk about the current interest rates and why people are waiting. And remember, guys, drop your questions in the chat. We're here to answer questions. Otherwise, you're going to listen to Lourdes and I talk about a lot of things, which again, it's all going to be beneficial, but you guys are here because you want to learn about something specific. Drop it in the chat. We're going to answer it for you. You know, one of the things that we always talk about, Lourdes, is that we have some clients that are on the fence because the rates are high and they're waiting for rates to drop. What happens when rates drop to property values?
Yeah, they go up.
They go up.
So so
Yeah.
yeah, when we had the 3, the 2%, interest rates, there was so many people out shopping. I mean, it was awesome. It was great if we were able to get a property. It was awesome. The only issue is that there's so much competition, and we are seeing more appraisal gap waivers. We're seeing waiving inspections, waiving contingencies. I had an offer, or I had a listing, and it had over 30 something offers listed over. I mean, the highest offer we saw was like 60, 70,000 over ask. Appraisal gap waivers, waiving inspections. There's all kinds of crazy things. And for your typical person, and especially their first time home buyers, it's really, really difficult for them to actually be able to be competitive. And then there's all these misconceptions about the VA home loan. Most of the time, the other agent on the other side, the listing agent, if you're representing the buyer, doesn't have knowledge of the VA home loan. So they also see that as an obstacle. So when there's so many buyers out there, it's really hard. They're going to go with what they think is best: cash, conventional, FHA, then VA. That's the line that they think, and it's our responsibility as real estate agents representing our clients to educate those listing agents on how the VA loan is very beneficial to our clients
Right.
and for them
And
too,
that,
for the
yeah.
sellers.
And that's the thing. What you'll see is that because values go up and rates drop, the actual payments of the mortgage still go up, even though the rates have gone down. So those are things to think about. I have another video that I did just talking about what that comparison looks like when it comes to doing that. So I will drop that also in the description so you guys can kind of see what that looks like. So you guys can take a look at that when you have time. But again, these are like great videos that give you some good comparison for that, because again, that's the discussions that people are having every day in, day out. It's water cooler talk. You turn on the news, I hear it all the time. People just going on walks talking about, can we buy? Should we sell? That's like another thing. All right, Lourdes, is that, what do you tell people that are interested in buying a place, but they have a property and selling it? What, what can they do to position themselves if they are thinking about selling, or like they're a first time seller?
Yeah, so first time seller, if they're thinking of making a move, then right now it will be easier. And we are seeing individuals, when you're purchasing your next property, we are seeing sellers accepting home sale contingencies, meaning that they're allowing you to keep that as a clause, because when there's so much competition and you have to sell a home in order to buy a new one, it's like almost not impossible, but it's very, very, very difficult at that point to actually have that home sale contingency. So this might be a great time to make that move. On the other end, there's not enough inventory out there right now. So we're still seeing multiple offers. it's not as crazy as it was before when the interest rates were really low, meaning you're not going to see, 30, 40 offers. But if it's in an area and your home is priced right and then in a good location, comparable, to some of the areas, and if it's in a good location, then it's going to go very quickly with multiple offers. We just saw a 4 unit in a specific area, and they only allowed they were doing a 10 o'clock to 11 showing, and I think there was over 15 groups that came within that hour, and there was multiple offers, and it was like second showings will be next week, to see the whole entire building. So it was very eye-opening to see that, and that's just something. It's good for sellers and also good for um, buyers right now. Actually, the moves are, it's favorable.
That's awesome. Yeah, and that's the thing. Like I was talking with somebody today. It's that it's the worst time. Well, right now, this current period, right? October, November, December, January, February. It's the worst time for sellers, the best time for buyers. Right. This is where veterans had the best opportunities to get their deals won in today's market, right? And so, guys, we're also streaming through multiple platforms, so not all the questions will come up wherever you guys are. So we just had a good question that came up: is that how do I know if I'm getting a fair deal on a purchase price? Like, what dictates? Like, if you're in a multiple bid situation, right? How does a first time home buyer feel comfortable going over list price, or how do you determine that?
Okay. So you want to go? Oh, sorry, David. Go ahead.
No, no worries. Yeah. So I mean, I think there's two parts, right? So there's the real estate part and there's the financial component of that. From a finance perspective, do you have the down payment difference in the event that let's say you're going over list price and you love the property? It's all conditional. It doesn't always make sense, right? Just buying a house just because doesn't that's not a good reason, right? Either it's because you're going to be saving money by going to for you a better school district, so you don't have to put kids in private school. How much money is that worth? Do you have the money in a TSP, a 401k, savings account, or you can get a gift fund? That's going to make a difference because if the appraisal, let's say, comes in short, are you going to be able to make that work, right? Sometimes we're relying on seller closing credits, right? So Lourdes, on your side, if you guys increase the price, the value doesn't come in, the deal falls apart, right? So there's some challenges to that. But, Lourdes, how, do you go about, I guess, from a buy side and a sell side to determine what a fair price is to list the property or make an offer on?
Yeah. So one of the things that you primarily have to look at is what has sold in the last 6 months, a 1 mile radius from the subject property. So that is your base guideline. I have some people that say, "Oh yeah, look up what it sold for, 10 years ago, whenever it sold," and that's not really a good basis to judge the actual value. So this is what the appraiser is going to look for within the last 6 months. Now, the only time that it comes, you do have to worry about how soon that they bought it and what they bought it for is if you're purchasing with the FHA loan. And I know this is a around VA home loan, but if you have your VA home loan tied up and you want to use your FHA loan for another property, if it's what is it, the flipping clause, David? I think it's like a
For
90 day flipping
FHA,
clause.
I think
Yeah,
it's
for
90,
FHA.
it's 90 days for a flip.
Yeah, and that's only the real time that you do have to pay attention to the dates, but it's usually 1 mile radius, and then it has to be like properties in the same school district comparable to subject property. So if it is a two-story, new build, we're looking for two-story new builds as close as you can to get to the subject property. Then you start to look at the square footage and things of that nature, and you want to get as close to the comparable sales in the last 6 months. And that's what we need to focus on is really that whole picture. And when we're talking to sellers, this is what we say, okay, this is what the home's sold for, and this is what we should list. And I always get the question, well, Zillow says my house is worth so much more. And, Zillow's algorithm is not always correct. So, that's why we show them the actual numbers. We show them the property, and that way they can make the decision and say, okay, this is a good price to list for.
Yeah. No, and there's so much, and plus it's like your personal touches. Is it custom home? Is it, there's a lot of things that go behind that you really have to factor that in. And that's why working with a professional realtor that knows how to advise you on those pieces is important, right? Real estate also isn't always about numbers. There's a lot of emotion that goes into a transaction. I'll give you good examples, right? We have couples that will spend a year looking for a property. And when they find that one property that they love, or it's tough because to what end do you go to make that happen? Right. And that's kind of the challenge. Like, Lord, I mean, you've seen this before, Lourdes?
Yeah. Yeah. So it just depends. Some people right now with the lack of inventory, we do have a few clients that's taking a little bit longer than expected for sure. But this is their forever home. They're not going to be purchasing a car. So sometimes it does take some time. I know it took me 3 years to get my 4 unit,
Mm.
and that was because of different. I needed income. I'm like, what do you mean? I make good income, but you have to show on paper that you're making good income. So as long as you come up with a plan and you're comfortable with the budget, and budget is another thing that I do want to hit on, because a lot of people say I'm pre-approved for $600,000, but I don't want to go over, a $3,000 a month payment. Then okay, then we have to focus on half of your pre-approval, and we have to run the numbers just to make sure that you're really comfortable with what your monthly payment is going to be. So that's another thing, another role as a realtor is just to make sure that you are staying with something that you're really comfortable and staying around as far as monthly payment, and then also deferred maintenance. Some people are like, yeah, I'm going to fix everything. And I'm like, oh God, like this
It's
isn't going to bring
expensive.
you any type of valuation, and we're already buying at the top of the market. So just being able to identify those things is very important as well.
Yeah. Yeah. And just to touch on, I guess, a couple of things, Loris, that you mentioned there also kind of lies in with some of the misconceptions that folks have. But I will point out this is that remember, when you're buying a home, if you're going from renting a property, and let's say you got a 2 bedroom, 800 square foot apartment, and you go to a 3,000 square foot home, I have a feeling that your budget for electricity, heating, air conditioning is going to be significantly different, right? It's not going to be $50 for gas. Now you're talking 250, 300, right? You have to factor all this into a budget. That's why we're also big on budgeting, knowing how much money you bring home, how much money you're comfortable with, because the lender's going to say, yeah, 600,000, 5,000 a month. And you're thinking to yourself, oh yeah, 5,000 a month, that sounds doable. But then when you look at your finances, you might be stretched and you don't want to be house poor either, right? Now, for veterans that have a service connected disability, now this is be specific for Illinois, is that if you have a 70% or higher disability rating, you don't pay property taxes. In other states, it's 100% PNT. So that's why for veterans that haven't started their VA disability process, I'm sure there's something that you can claim, right? We've all been in the service. There's things that happen. You just have to be able to get a service connected, right? So if you haven't started that process, I encourage you to do that, because there's also big benefits like not paying what's called the VA funding fee, right? Yeah, the loan is free, but the VA does charge a fee, and then they allow you to roll that VA funding fee into the mortgage, right? So that's kind of how they recoup their money, and that's how they make money from the program. It's the only government agency that generates revenue. So that's great. So, and then also, like Lourdes mentioned, you can have multiple. So, some of the common myths is that you can't have multiple VA home loans. You can't get two VA loans at the same exact time, but you can get a VA home loan, and then there's no waiting period. So, let's say you PCS or you move 5 days later after closing, you can use your VA loan again, right? As long as it makes sense, you can do that. And again, no waiting period, because that's a common one. I did a TAPS class today. They're like, "Oh, I heard you have to wait a year." No, It's there is no minimum time period on that. So, and we come across misconceptions all the time from veterans, real estate professionals, lenders, you name it, Lourdes.
Yep. I used to
It's
say, and I say too, you just got to live there for 1 year.
yeah, I
and
know.
and
Well,
that's
yeah.
that's not the case.
No, that's not the case. So it's really understanding leveraging that. And with that disability component that I mentioned, one thing that I want to point out is that you do not need to use a VA home loan in order to get the tax exemption. You just need to be on the title of the property. So let's say you have a parent that's 100%, whatever they have that meet the state requirements for property tax waivers. If they're living with you can put them on title and they can have your taxes be removed because it's their primary residence. So it's the truth, but you have to know what the rules are. And sometimes there's some gray areas. There's time frames you have to meet in order to get your taxes exempt. And it depends if your taxes are paid in arrears or paid current. It also makes a difference uh, on that piece. So again, guys, drop questions if you have them in the chat. Always here to help. We serve at the pleasure of our fellow veteran community. I always want to be able to answer and be on top of any questions that you guys might have. Another thing with VA home loans, Lourdes, you and I see this a lot. Is a lot of veterans get discouraged from using their VA home loan
Mhm.
by different lenders and realtors alike. I see it on almost a daily basis. What words do you have for veterans out there that have faced some of these issues of I don't want to say being discriminated against in a way it kind of is where they're like, well, we don't want to accept a VA loan because of misconception. But what hope can you give the veteran community that faced this and lost out on bets on what they could do to better their odds of winning?
Yeah, one thing that we get mostly all the time is specifically around condos is, well, there's a few and we can go on and on, but I guess we have the time to, to hit
Yeah.
on those. But with condos, that the condo building has to be approved and it doesn't. You can always get a waiver. There are some lending institutions that take, and I'm working with one right now. Um, it's they're taking way too long to even submit the paperwork over to the VA. Needs approval for a waiver or for the building to get approved or disapproved, and that's not really how it's supposed to go. So having a team that really understands the process, I want to say, is critical, and it should not take 30 days to submit documents over to the VA to see if they'll approve it or not. And typical turnaround time, David, we've knocked these out in less than 40 days
Oh,
for
easy.
some condos, but
Easy.
it should take that long. And if it's not, then I would probably consider getting a lender who knows and is very familiar with the condo approval process. And as a real estate agent, it's very important for us to know that, because as I'm educating, every time I submit an offer, I educate the real estate agents, the listing agents on what the VA loan is and how amazing this product is. If there is too many owners, if one individual owns too many properties in a condo, you need a special loan for it, usually a portfolio
Non-warrantable.
loan. A non-warrantable, you need a portfolio loan for those. Thank you, David. But with the VA loan, you don't need that. Don't look at that.
Right.
So that's huge. And what kind of advantage is your buyer going to have when they have less competition going into something like that? So litigations, there's so many things that the VA doesn't look at now. As a real estate agent, you just want to make sure, hey, how long do you want to live in this property? This might affect the sale of your property if it's not changed. So as a professional, you want to make sure, as your real estate agent, you want to make sure that they tell you these things, because you don't want to get stuck into a situation, especially if this is going to be a short term. Hey, I just want to live here for a year and then move out and I want to rent it, but they don't allow rentals. That's an issue. So you really have to understand wholeheartedly what you're getting yourself into, and just make sure that that's okay. Another one they get all the time is, yeah, this property is $1 million. The VA loan has a cap. No, they don't.
Oh
So
yeah.
you can now, they remove that cap. So you can now buy a $2 million property. If you qualify for it, you
Right.
can buy it,
No money
and
down. No money down.
yeah. So that's another like crazy advantage on the VA home loan. And as a real estate agent, you should know and advocate for your clients and say all these good things about the VA home loan because you know and you're educated, your agent is educated and they know what to say to the listing agent so that you have a chance in this market. Even when the interest rates go low, it's going to get really difficult or go a little bit lower than what they are now. A lot of buyers are going to start to flood the market. And at that point, you need to make sure that you're working with a team that understands and can go through that process with you
Yeah, and
or
then
for
that's
you
the
and fight
thing.
for
Like
you.
you touched on, Lourdes, that's is that having the right team makes all the world difference in today's market because you have a bad agent, your offers aren't getting accepted because they don't know how to present it. You have a bad lender, they accept your offer, but then no one contacts them. Nobody orders the appraisal right away. There's no communication is the key, right? You wouldn't be if you're in a relationship with someone and you had horrible communication or just talked once in a great while. It's not going to end up well, right? This is the same thing in a real estate transaction. So making sure that people are looking out for your interest is important, and that they do what they tell you that they do, right, Laura? It's like like with that condo situation, client is going to be on the hook, rates going to be expired, the rates have gone up, they're just going to get shafted at the end, right? And so that's what you want to avoid from that. Which leads me, we had a good question about how long, and I'll let you answer this one first this time, is how long does the typical home buying process take from contract, right? So you've executed on a contract to closing. Like, what do you see as the average number of days for that on a regular single family home, let's say?
On a regular single family home, we are looking right around those 30, 35 days. And business, yeah, 30, 35 days total typically is what we're seeing right now. And it definitely depends on your team because there's some lenders that can do it as early as 2 weeks. You have some that are taking a little bit longer. So it definitely depends on your team, but on average, we're looking at about 30 days.
Yeah.
What are
Yeah.
you
30
seeing?
days is kind of the typical. I think right now, because the market is slower, the we're seeing appraisals come back much faster. So that's been the process. Now with condos, we're still seeing from VA condo approval about 30 days from start to finish with a waiver. But also condos are a little bit more complex because we have to wait for third parties to get us documentation, right? So that's the only downside to that. So kind of keep that in mind. Can you go longer? I guess. I mean, I guess that's not a question someone asked, but it is relevant because some people uh, buy a home, or they want to buy a home, but they don't want to move into the property for an additional 4 months, 2 months, right? They want to do, let's say the sellers want to sell their home, but they still want to live in the property and they want you to rent it back to them. Have you come across that, Lourdes?
Yes. Yeah, they want to get out of
Right.
they want to get out of that situation. So we for in the past I had a client was like, I want to get out of this environment. I don't like it anymore, this and the other. So they sold and they said I will be open if I do get a if an investor buys it and wants to rent it out, I would 100% take the rental because I like it, but I just don't want to own it. So I do
Right.
see that in certain condos and stuff like that. If something breaks and you're a homeowner, you have to fix it. Whereas a renter, you don't have to, but you do pay a little bit of a premium for being a renter. And especially in this market with these interest rates, it is very difficult to cash flow.
Yeah. And that's the thing. Like, since sometimes people, especially if you're in an area where there's a lot of active duty, right? They'll be like, hey, I want to sell my home, but I still need to be here for a couple months. You can do that with a VA home loan. Okay. So the nice thing is that you intend to occupy within 60 days, but you technically have up to a year for it to be considered reasonable for you to move into that property. Just remember that you have up to a year for it to be reasonable. Now, that's for veterans. For active duty individuals, you don't even have to occupy that property as long as your spouse or child will be living in that property. They will meet the occupancy requirement. But again, that's only for active duty. Veterans, guard and reservists, you're talking about you have to move into the property within a year. So, but you have to still qualify with it. All of that still goes with there. So that's good, Lourdes. We got another question: is how does credit score impact my ability to buy a property? So thank you for that. So I'll answer that one. So one of the things when it comes to there's two parts to a VA loan: qualification. Do you meet the time and service and character of discharge? Right. That's you can use the VA loan. Then it's qualification. Do you meet the credit, income, and assets qualification? Credit has an impact in a couple different ways. One, interest rates are primarily driven by your credit score. So the higher your credit, the lower your interest rate is. The lower your credit, the higher fees you pay to get a home loan because you're considered higher risk, right? So the number one thing that people can do right now, that if they're sitting on the sidelines thinking like, I want to buy in a year or 2 years out, start working on your credit if it's not over 740, because that's going to give you the biggest advantage in the home buying process to get the lowest interest rates. And you should be thinking that far in advance when you're thinking about buying a home. Not, hey, I'm going to wake up and be like, today we're buying a home. Because sometimes, Lourdes, that's what it feels like with clients. They're like, hey, you know what? I want to buy a property today. Well, what's going on? Walk me through it. When you're thinking further out, it lets you plan for those things that may not be on your credit report, like your credit karma, because lenders have different access to your credit. It actually pulls everything. And FYI, credit inquiries only stay on your credit for 90 days, not 2 years. Everyone keeps saying like, oh, I don't want a credit inquiry. It's 2 years. I don't know. That's coming from the credit bureaus. They made their own credit score. Nobody uses it. Everyone uses FICO. So it only stays on for 90 days. Have a real credit inquiry. Have someone really check your financials. I can't stress that enough. Lourdes, we've, realtors have had clients, right? Clients say, and I'm sure you hear this, Lourdes, tell me if I'm wrong. I'm good to go. I make good income. I have good credit. I can qualify. I don't want to get a pre-approval. I want to look at properties. And then if I find something, I'll get pre-qualified then. Have you heard that before?
Yes.
And when they do find the home that they like and they apply and they get denied, is it a surprise?
No.
It happens more often than you think because lenders look at different things. We look at residual income. We look at your taxes. If you're W-2 and self-employed part-time and you don't make money being self-employed, guess what? We're deducting that income from your W-2 income. You have childcare expenses on a VA home loan. Same thing applies. It's the only loan product that we take that out of your qualification. So those are things to keep in mind when you're going through that process. You go through that process with the VA home loan. There's a lot of nuances. And then other times, people are surprised that they can qualify for more, right? We just had that recently where someone's like, I can qualify for what? And I'm like, it was twice as much as what they thought. Now, that's good because you shouldn't be spending more than what you budget, even though you qualify, because the VA loan really gives you a little in that space for that. So, Lourdes, we have another question, is that when it comes to once you've been pre-approved, what are the first things a buyer should consider when talking with a realtor on what their wants versus needs are? How does someone determine that?
Yeah. So one thing I have a few questions that I do ask some buyers. And then when we're looking at properties, I ask like so many more. I'm always asking questions, but it's to identify and ask them certain questions. I had a client was like, wow, like nobody's ever asked me this question, but you want to ask so many so that when you're looking through properties, they're going to send you like 20 homes and they'll be like, we want to see all these homes. Be like, great. But none of these have garage. And you said garage was a must have. Well, I mean, everything else is fine. So I don't think that that's my must have. Perfect. That's going to open us up to so many others, but it's always knowing your criteria and your criteria, your budget, your must haves, and your deal breakers. So, if you can identify those, I feel like you will be so far advanced in the search because you're going to be looking at the properties that are going to make most sense to you. If you're like, hey, my goal is to rent this out in the near future, so it does have to cash flow, it has to be in a good area, it has to be this, then those are the things that we're going to be really looking at. So yes, those are some of the things, but identifying and knowing what you want, you're not going to have all the answers, but you do know what you do like and what you don't like. So those two things are very very critical when it comes to your home search because though I mean I can't express it enough. It's just knowing your criteria and figuring it out. Ask your real estate agent to make sure that they have everything that you want. Now, you can say all these things and then we put it into the search and be like, okay, there's nothing that comes up. Let's refine your criteria. Then you do have to focus on what's going to be more important, your criteria or your budget. And it will go one way or the other. I had a client one time we were looking for properties. It must have the ensuite private master bathroom or primary bathroom. I'm like, okay, not a problem, but there's nothing in our price point. Do we want to go up on the budget or do we want to take away this must have? So, so yeah, David, do you see anything like that on your end?
Yeah, I mean, well, definitely having a property tax exemption changes things, right? That's a huge factor in that piece. But like, yeah, you definitely hit it right on the button for that, and you have to constantly shift gears because it's like watching. I used to watch those HGTV shows, and they'd be like, this is like they take them to a home that show everything that they want. Like, guess how much this is, and they're like, oh, 1,000,002. That's like 600,000 over my budget, and so like you have to either get crafty, right? And you can make a home look beautiful. You have to put time in it. Some people are really good with their hands; they can do it. Other people aren't, right? But yeah, those must-haves. You know, why I look at it recently in life. I'm always like, I want this, I want that, or I need this, and I think to myself, like, you know what? I've made it 40 years without any of that stuff. I think I'm gonna be okay if I don't have it. You know what I'm saying, Lourdes? It's like sometimes your wants are really needs. I mean, your wants. Wait, hold on. How does that go? Yeah, your wants you don't need them, but needs like if you need something, like having a sink is a need. Having a 72-inch sink with a drop insert that's $7,500. You don't need that, right? I want all Viking appliances that cost $25,000, but the kitchen only costs 4,000. That doesn't make sense, right? You got to make sure that what you're looking for is going to be. It doesn't even have to necessarily be aesthetically pleasing, as long as the property has a solid structure, right? It's kept up well, because a lot of times you can do a lot of stuff yourself for pretty cheap. We should do a class, Lourdes, now that I think about it, on home renovation ideas, right? From a real estate perspective. And I could bring on a contractor that you can do a lot of stuff DIY, man, and save crazy amounts of money, which you can get some labor folks. I don't know if that's something you'd be interested in, but
Yeah,
it's like it's mind blowing. I mean, I'm doing a rehab myself. Uh,
me
go
too.
to Home Depot. Kitchen is kitchen cost is $40,000. You know when I went online, bought the same thing for 4,000.
Oh, geez.
So there's plenty of opportunities for being able to purchase a property and being able to do some of that stuff with that. So, guys, there's plenty of stuff that you can do when it comes to these types of these types of like loans where you want to think about what you want to ask. So we've had some good questions so far from folks. We'll leave it open for a little bit longer for be able to ask any questions that you might have. Again, we're happy to answer them for you, for the community that's out there. And I'll just talk about a couple things, and then if we have no more questions, we'll kind of wrap up. Does that work with you, Lourdes?
Yes.
Awesome. Let's talk about, does refinancing make sense right now? And I'll tell you that it's kind of tough. If you're thinking about doing a renovation on your property, get a home equity line of credit. Yes, the interest rate's going to be about 10, 14%. But guess what? It's still cheaper than refinancing your whole property into the new market, right? So kind of keep that in mind. That's just something that you just want to be able to tackle and do it the right way, so you don't do that. So, and remember, with VA loans, there's no private mortgage insurance, so you don't have to pay that additional fee like everybody else does. It's a huge benefit. Take advantage of the VA loan, no matter if you do it now or later. Just don't get duped and don't get steered away from the VA loan. It's a phenomenal product. Lourdes and I stand by it 100%. Does it always make sense to use a VA loan? No. If you're thinking about, we're going to do a whole class on being an investor with VA, with being a veteran and an investor, and how to leverage other loan products to create wealth. You don't have to use a VA loan. Yes, it's phenomenal. Do I recommend it 100%? But if you're trying to do things and do big things, you need to take kind of step back and absorb what's out there so you can leverage it to your to what you want to do. This isn't like a 10x your money kind of thing. This is like just like legit, like, how can I get 4 multi-units in 3 years or in 1 year? Actually, there's ways you can do these things. It's just combination of having money, a little bit of money. You don't even need a lot, actually. It's like you need a job or you need some income, right? And we have to be able to figure this out. So we'll have those classes coming up. And again, I just want to thank everybody for their support in supporting what we do at VA Housing Education by educating the real estate community. Any closing thoughts, Lourdes, on your end?
Yeah, I'm really excited to go over the investor class
I
because
know.
going through some things and hopefully I get this HELOC approved because I'm going to go buy a couple more buildings with that. So, and I said a
That's
couple,
awesome.
yes, a couple, and take my little 4 unit and have my 4 unit go buy me all these other properties. So, fingers crossed that I do get that HELOC, and if that doesn't work out, then I'll figure out a different way.
Right.
But yeah, but there's so many strategic ways, like you were saying. They just passed a conventional 5% down on a multi-units, whereas before it was 15 to 25% down if you wanted to go to 3 to 4 units. And that is kind of where most of the cash flow comes, is those 4 units. So I think it's a great opportunity for you to leverage that. And it's another door open if your VA home loan's already attached to a property. So you can easily take what's called a home equity line of credit out for the down payment for that 5% if you wanted to, and go buy yourself another building. So now instead of 4, you have now 8 doors, which is awesome. A great opportunity for you to do that. So we will be covering that in a later class.
That's awesome. Yeah, thank you for that, Lourdes. Yeah, and I'll do a whole video on that program because, yeah, there's always something you got to know about how these programs work. So we'll definitely be covering that here in the next couple of weeks. So thanks again for everyone for joining us tonight. That's it for us tonight. You have a great evening and a great week. It's only Tuesday. It feels like it should be Friday, but that's okay. We still got a whole week to go. So you guys take care and we'll talk soon.